This is Macro Analytics, delivering frank conversations on global macroeconomics and market analysis, outside the mainstream, featuring discussions and debates between Gordon T. Long, publisher and editor of GordonTLong.com, and his guests. The content of this discussion is strictly the opinion of the participants. It is in no way a solicitation for business, nor is it to be considered investment advice of any sort. Always consult a registered investment advisor before making any investment decision. These discussions are extremely hard-hitting and terribly frank, and parental discretion is advised. Now, on to the show.
Good morning. I'm Gord Long with GordonTLong.com, and I have with me this morning Ty Andros. Ty is the president of TraderView, publisher of the TEDBits website, and writer and editor of his well-recognized newsletter, also named TEDBits. Welcome back, Ty.
Thank you for having me.
Ty, a lot of people are talking about hyperinflation, when it's going to arrive, why it hasn't arrived. I wanted us to talk about that subject this morning, but specifically through an Austrian lens. And you're probably the most recognized applied Austrian in the world, so I think our listeners would really appreciate and value your perspective on it. Some would say you don't really understand hyperinflation until you live through it, and that's because if history is any guide, it's different than you expect. My experience, Ty, is 99 out of 100 people roll their eyes and say, what's there to discuss? You know, it's simple. It's about prices going up. Well, that's correct. But that's a symptom. That's not the cause. And it's knowing the cause is everything, because it tells you why it happens and why it happens so fast. And I have a table here that shows just the magnitude of how many times we've had hyperinflation in 56 different episodes of where this has happened. And one of the things that was done in the studies building this particular table also identified, maybe more importantly, how long hyperinflation lasted. It happened abruptly and, in fact, was over in a very short period of time. And by over, I mean the currency totally collapsed. So it wasn't that hyperinflation ended, it's just the whole valuation suddenly changed. Any comments on that, Ty?
Well, just these examples are just a small anecdote of the hundreds of currencies that have collapsed, and fiat currencies always end in hyperinflation unless they decide to take them out of circulation early. And without exception, it's something we have to plan for, because we know the destination. We just don't know the zigs and zags that we're going to take to get there. And we have, a really interesting dynamic going on in the world right now, in that everything is a derivative of the dollar. And I've got some slides here, but basically, the hyperinflation is a double dose for people that use the dollar as a reserve asset. So, we're really in actually a time when really I can't think of a time in history when fiat currency was used as a reserve asset. And so we're really going to go through, I'll call it a very interesting learning experience.
Ty, that's the exact point that John Ravino and I talked about in Currency Wars. We've never had a fiat currency regime as the world's reserve currency when we went into a currency war. What I've referred to as a currency cartel that control 90% of the world's trading currencies and are held as reserves, not just the United States dollar, but in fact the British sterling, the euro, and the Japanese yen. What causes and what potentially will cause hyperinflation, because hyperinflation is first and fundamentally about a loss in confidence in the currency. I have up a definition, and I don't want us to get into definition because there's so many people that have different views of it, but this is one, it's actually out of Wikipedia. Certainly this person by the name of Philip Kagan, who wrote the seminal book on what hyperinflation was, but it was interesting. He defined it as monthly inflation rates that exceed 50% and ended when the monthly inflation rate dropped below 50%. It's just a staggering level. And he's the one that then related it back to the sudden collapse in the currencies. But it's about currencies. That's what it's really about. It's that total and absolute loss of confidence and trust in the currency being a store of value. And therefore people flee and they rush to put it into anything that's real.
Well, people don't know that currencies are IOUs. They don't have a clue. And, they just think of it as money. And of course, they've been dumbed down on purpose. But in general, I would say that this is an accurate reflection. I mean, 50% compounded monthly. Once it gets to 10% compounded monthly, there's going to be rioting in the streets. And I mean, talk about societal chaos. But there's a number of reasons it has not emerged yet. And we're looking for those things to change, and then we'll have the realization of history repeating.
And it is a sudden realization. And that's why it's always a panic, too. And it gives you no time to react unless you were well aware that it was coming.
Well, let's take a look at a quick little quote from von Mises, and I'm just going to read it, and we'll go to the next one. I'll say a few quick words. The first stage of the inflationary process may last for many years. While it lasts, the prices of many goods and services are not yet adjusted to the altered money relation. There are still people in the country who have not yet become aware of the fact that they are confronted with a price revolution which will finally result in a considerable rise of all prices. Although the extent of this rise will not be the same in the various commodities and services. These people still believe that prices one day will drop. Waiting for this day, they restrict their purchases and concomitantly increase their cash holdings. As long as such ideas are still held by public opinion, it's not yet too late for government to abandon its inflationary policy. And of course, we can see savings balances, piling up around the world. And so let's take a look at an excellent slide about uncertainty and slowing monetary velocity. And this is one of the main reasons that hyperinflation hasn't shown up, because they can't print money fast enough to offset the money that's going onto the sidelines in fright. And that's why they have to keep doing more and more. One, to cover up insolvencies, because money printing has nothing to do with economic stimulus. It has to do with stopping the economy from collapsing because of the velocity of money, and also to fund the insolvencies of sovereigns and their banking systems.
Ty, you make an absolute excellent point. It's fear of money going to the sidelines. It's additionally the money that's actually being destroyed, and that is from malinvestment and mispricing, and it's not delivering. And they're papering it over at a phenomenal rate by printing more money, but that doesn't take away from the fact that it's being destroyed. And if you were to look at EBITDAs from corporations on discounted free cash flows, which is the valuation of a corporation, not the cash it holds, but its ability to generate cash. We're down at the zero line. It's been steadily falling for quite some period of time. And McKinsey just came out with a global study and showed that enterprise values have been in a straight decline. That is completely a flip of what people currently perceive that's going on, because corporations are flush in cash. Of course, they're getting as much as they can in the bond market. So the collateral themselves is failing, and when the collateral fails, it's like a margin call in the debt market with this rehyperification. So they're printing, but they're on a treadmill that they're running faster and faster. And as Mervyn King said the other day, Bank of England, when you start printing money, it becomes like running uphill very quickly.
When they're printing money, it's, it seems like it's money for nothing. And of course it isn't. It's just another IOU being pushed into the system. And just another promise that there is no final settlement. And so they're really just pouring future poison. That poison is not going to, we're not going to avoid its toxic effects. It's just a matter of when. And, you talked about worthless collateral. Well, just think of a treasury bond. It's the junk of the junk, whereas, I would argue that, real companies that really produce cash flows, over the intermediate term will, hold their value and increase, depending on if we're in a deflation or an inflation. And of course, we're going to be doing another recording here shortly on the indirect exchange. I invite everybody to watch it.
You mentioned many times, and I think it's an excellent way of putting it, that bonds are IOUs denominated in IOUs, and that is bonds are by definition a debt instrument, but they're denominated in the currency. And the currency itself, whatever the currency, is in fact also an IOU. And so what happens with hyperinflation is we've driven up bond prices and yields down, where we've got negative yields right across the entire yield curve as we've practiced this macroprudential strategy of financial repression. Where do you go next when you got to that point? Well, the answer is you're forced to debase the currency at an accelerating rate for many reasons. I understand to try and give competitive advantage in trade, but what's being done now is to debase it so that those bonds are in fact worth more value because of the currency is falling if you're against another currency.
I would say create the illusion of increasing value. Okay, because it's actually exactly the opposite.
That's why they do it, and therefore it is working very effectively with large money managers, but it's confusing the difference between price and value. And the value itself is actually going down, though they think the price is right. And the value, why I say, and you're correct, Ty, why the value is going down is because it's total junk. In fact, it's worthless. And the day will come, and when it arrives, it's called hyperinflation, because there's this fleeing from the currency, and because it's not worth it, suddenly everything's going up in price, whatever it's going to be. And the only safe place to hide is in a hard asset. And a hard asset, I defined, is one that generates discounted free cash flow. Or just stores its value like gold or silver.
That's you can store wealth in something that's real, that cash flows.
That cash flows based on a new environment. So this chart that you have up really is just showing the building amount of fear and concern and malinvestment, and therefore it creates a liquidity trap. And that's what we're in right now, despite printing money at accelerating rates.
Well, but they've got a double, sword to bear. They've got they're trying to hold the value of worthless assets up, and at the same time, they're poisoning their own future. I mean, it's just, it's their own demise. They're sowing the seeds of their own demise.
Exactly. That's why they knew when they got on this treadmill, those that really understood monetary policy knew where it would end, but they felt, for whatever set of reasons, that they had no choice. We're playing out a game now where we know how it's going to evolve. And if you want to see how it's going to evolve, just look at the steps that Argentina is going through. And I put that up in a discussion I had the other day on currency wars. And we are Argentina. We are following along a step by step exactly in what they went through.
But what's the difference? Let's talk about that. Well, Argentina is just farther down the same path as is Venezuela. And you just need to sit there and look at what's going there to see where we're headed. And both countries, especially Venezuela, but quickly following, Venezuela quickly following Argentina, is a collapse in real production, a collapse in real commerce, real manufacturing, as those things collapse because there's no reward for them anymore in those socialist economies. There's no reason for somebody to get up in the morning, really, produce more than you consume, to lead a prudent lifestyle, because to do so just means that you will constantly be, disappointed because it's going to be confiscated from you in one way or another. So real economic activity is collapsing. It's collapsing here in the United States. It's collapsing in Europe. It's just there are different stages.
It's collapsing around the world. The other day, Charles Hugh Smith and I went through this in a fair bit of detail of the cycle based on an article that he wrote about the global endgame and the 14 steps that lead to it. And in fact, the part of the endgame is when you can finally get back where pricing can be restored. There's leverage or ability to increase pricing. That occurs only after you've had a market clearing event, where in fact you've had the resetting. And these points that you're making out, indicating in Venezuela and Argentina, are the things that are a precursor to that event, are a natural sequence of how it unfolds.
Well, it's the politicization of central banks, but I would argue they've always been that way. I mean, look at the testimony of Bernanke last week. If anybody had any kind of an objective reading of that, he said, no, I can never raise interest rates again. And no, I'm never going to quit printing money, because to do so would sow the collapse of higher interest rates would cause. And he was very clear. I mean, they can talk all they want about an endgame or an exit. He said very clearly, no, we don't ever have to sell our treasuries. No, we don't have to raise interest rates. That'll sow the collapse that the money printing's trying to stop. He said, no, we believe that asset prices being held up is a good thing. And of course it is, because if they actually marked those assets to what they could sell them for, we'd be in a barter system overnight. The whole financial system and the governments would be, exposed for swimming naked, right? When the tide goes out, as Buffett puts it. There was no misunderstanding Bernanke's message last week, and he goes, "We don't have an exit strategy there. We have it when we need it, but of course he didn't tell us what it was, and he didn't tell us what it was because he doesn't know himself."
The new governor nominee of the Bank of Japan is very clear. Mark Carney, new governor of the Bank of England, is very clear, and we've always said what Mario Draghi's mandate really was. They are totally committed to not only continuing and accelerating the money printing game, but there is no end game. They do not ever see withdrawing it unless something dramatic happens. They see it as they can never raise interest rates. They're in that conundrum.
And of course, capitalism can't work without pricing money. I mean, remember, the money is, worthless. It's redeemable in nothing. It pays nothing. Okay. It's created out of thin air. It's all an illusion. I mean, and when you try to, that's why, Warren Buffett can go out and buy Heinz, because that money is so, jello-like. And we'll cover that in a further recording. But money really has no value at this point, does it? Other than providing the ability to buy something, but what it's worth is indefinable.
See, Ty, that's the whole definition of hyperinflation, is when there is no longer a confidence in the currency. And the fact is, you just articulated, and we're reaching that point. So the end game is near. I'm not saying it's imminent, but we're in that final stretch, and it's like Winston Churchill said, now is not the end. It is not even the beginning of the end, but it is perhaps the end of the beginning. And I think that that's really the best way we can describe the fact that we now really are focusing on currencies that we weren't less than, I would say, 10 months ago. That suddenly they're the mainstream. Ty, we're right up against our hard line here, but you had your excellent article on the witch's brew, and you'd mentioned and you showed in it a chart that I have up right now. The reason that hyperinflation hasn't arrived is because of this incredible fear. And one of the charts you used was this one on M2 money velocity. You want to make a comment on it before we run out of time?
Well, we're below 50-year lows, which means that people are more frightened than they've been in 50 years. And secondly, you really can't see this going back to the Great Depression, but it can go a lot lower. And I would argue that that what Obama's doing and Merkel and all the powers that be, that the fear is only beginning, not ending. It's an ongoing thing. So really, I don't really expect hyperinflation to emerge quite as soon as a lot of people. It just the cycle of fear is still in its infancy. People don't have a clue what our fearless leader in Washington D.C. are going to do, and they can, and of course they're dedicated to creating perpetual fear, because that's how they gather their power, is by creating fear and taking your freedom to protect you.
John Rubino and I have been spending a lot of time on what we call catalysts, and they're catalysts of fear, and they're more than a coincidence. And we're seeing this growing focus, which is worrying people from various elements, and then it forces them to, what happens is they start surrendering rights and doing things that they wouldn't have done before. They start taking on risk, which is part of financial repression. We start to really do follow the herd. Ty, there's so much to talk about on this subject, and I know there's so many things that you want to get into, but kind of wrapping up here, are there some key points you want to make as an Austrian on your view of hyperinflation?
Oh, that it's inevitable, but I think that we're earlier in the game than most people think. I don't believe it's going to happen anytime in the next year or two, although we've got all of the elements for that to happen. We have 38 governments simultaneously trying to devalue their currencies to economic success, and sooner or later it's going to dawn on people you can't have confidence in any currency. And of course, in that definition that we had at the beginning, he talked about people moving to other foreign currencies, but really there's no opportunity to do that right now. And the people that are in charge of these foreign currencies are, as you know, the BIS, of which the main directors are, Ben Bernanke and Mervyn King and Christian Neuer and Mario Draghi and Kuroda. And so these people are really trying to keep an illusion going because they can coordinate the devaluation in all the currencies at the same time and create nominal illusions. And we really are going to have a good test here, which is coming up in Japan, because, von Mises said the one thing people must never think is that inflation is the policy of government. And he is saying something that is verboten in public. And so it's going to be an interest, you really can look around the globe, whether it be Venezuela or whatever, but you get to see little, I'll call it experiments, like a little experiment. And right now Japan is conducting an experiment in something that under Austrian precepts you must never do. You must never do. And we're going to see, because those people in Japan are fully intent on carrying out what they're talking about.
The people are never to appreciate that inflation is nothing more than a stealth tax. They've got to realize today what they see every day in the press. You've got Bank of Japan saying 2% inflation minimum. You've got Carney now moving to what he calls flexible inflation targeting, which is 2% plus. You can talk about the Fed and the ECB in the same context and the same measurements. And then I say to everybody, and exactly how much is your salary going up by? Is your salary going up by that 2%? And by the way, is your inflation only 2%? And so it begs the question. So government inflation is in fact now a stated policy of the government. And that's what von Mises said, right, Di? When people realize that, but it's not sinking in yet.
When they wake up.
I have a different view in that I don't believe they ever really wake up to that. What they wake up to is the fear that suddenly the money, the currency that they have their assets in is not worth anything. And therefore they panic and they want their money in something that's going to hold up its value, and that's what triggers hyperinflation. And they buy anything and everything that they can to get their money or their assets into. For those that aren't investment or and just have to live from day to day, it means buying food today because tomorrow they won't be able to afford it. And so they're driven at a whole other kinds of lessons that everybody's heard. Ty, we're well past our hard line. Closing comments you'd like to make, and also, as a practicing Austrian, exactly what kinds of things you do with these problems?
Well, one thing you can, plan on is that they will print the money, and they will print any amount of money necessary to preserve, in their mind, their own futures. And two, that is impossible, virtually impossible, to make money in traditional investments today. And until you fix your paper and restore the functions of money so you can stop the printing press, and then learn how to create what I'll call short-term trading vehicles so that you can play the booms and the busts that are caused by these policies, then you're really going to have a problem. Your portfolio may be going up on the top line, but properly measured, it's shrinking, at anywhere from 6 to 10% a year, compounded annually. If you're in an insurance policy, you're being killed. If you're in cash, you're being killed. If you're in government bonds, you're being killed. And I mean, they're cutting your wealth in half over a 6 or 7 years period. So you have to learn which way the wind's blowing, how to combat it. When you look around the world, where do you run, Gord? What country is not devaluating their currency without a printing press? Where can you go and seek refuge? Can you go to Switzerland? Nope. Can you go to Japan? Nope. Can you go to the U.S.? Nope. Tell me a place that's not devaluating, or trying to devalue their way to prosperity. And the ones that aren't will before it's over, or they're going to have their currencies shoot through the roof. So, you really need to learn how to preserve the value of your money, and then you need to learn how to make money when markets rise and fall. And I'm an absolute return alternative investment specialist. And so that's what I do. I use professionally managed futures, and then I put gold and silver back behind my clients' money using long-term option strategies, because the gold and silver, whereas, we're going through a period of weakness and consolidation, the days of gold and silver's glory are still in front of us. And, I think that what we're going to see in gold and silver are going to be dwarfed. But the nice thing about gold and silver is that, it'll reprice to reflect the lower purchasing power of what it's denominated in. And, sometimes it has its zigs and zags, and we are, subject to the whims of people trying to intervene in those markets. But ultimately, the money printing they're doing and the paper they're using to manipulate the market are actually the seeds of their own demise. And the more they print, the more gold and silver are going to go higher before it's over. Because as you know, I don't believe any human in the world can stop markets from clearing. And I don't believe this time will be any exception.
That list we started with says nobody's escaped from it. And we've never taken it on at such a level, on such a global basis. And as you point out, with no place to go that is not being forced to inflate, even if whether it's an aggressive strategy or a defensive strategy of hot money. So that's the position we're in. Ty, we have to break. It's a huge subject, but I thought it was worth talking about here today. We'll come back and revisit this one again, because as you point out, we're all very much in the early stages here as currency wars increase and as we move towards that panic event that will then be called hyperinflation. Talk to you later this week.
Yes, thank you for having me.
This has been Gordon T. Long, editor and publisher of GordonTLong.com. New recordings are posted regularly and can be found at GordonTLong.com. New show notifications are available through RSS feed, iTunes, and other social networking venues at GordonTLong.com.